So this week in the trading strategy, I've noticed things on the chart. And this is what I'm talking about when I say that edge is developed personally based on the things that you notice on the charts. So we're going to get another sheet set up where we're going to start tracking all of the things that we notice because you can't just make adjustments on the fly as you notice something, right? Notice something, mark it down, track that, and as you're doing your reviews, is the thing that you noticed that you think is going to make a difference to your strategy, is it holding up? So this week, we're going to just go through the trades that we placed, paper traded last week, see how they held up, see the adjustments that we made, and we're going to make note of them as kind of like a soft adjustment, and we're just going to keep track of it, see if it holds up over time. Let's start by going through some of the trades that I placed this past week. Okay, so here's MCL. Friday, I had this trade that basically didn't go anywhere. I thought with the big gap up here that it could continue higher, but over the weekend, there's more like kind of pseudo peace talks that were being talked about. So oil responded, it dropped, got stopped out, tried again on the rebound here, and I got stopped out again. So. We recorded that trade. As I mentioned last week, if you didn't watch last week's video, I was going to start implementing the strategy outside of that window of like 6:30 to noon. I was, and I did. And you'll see on some other trades it did work out nicely. So based on the news and the downtrend of the chart, I actually just left oil alone last week. Fundamentally, the news just wasn't supportive of a bullish strategy. So I moved on. We continued to trade gold on the 13th here. You can see we had a really great win. Got in here at the 200 as usual. Again, the next day got into the 200. Everything was going well till we hit this choppy day here. And I actually tried to get some on the rebound here with another entry, and we just got stopped out. So here's what I did on the fly. I noticed something. I noticed that the NASDAQ was on a tear. And, you know, it was displaying some signs of momentum. So I didn't really argue with it too much. I just went ahead and got in. I didn't necessarily always get in on the 200. I started trading more kind of what I saw on the chart based on things on the daily chart, based on what I could see. Like if something is on this much of a tear, like the NASDAQ was last week, in my experience as a trader, you don't really argue with it. And this goes against everything that you're going to hear as a newbie, where it's like you need to be precise on your entries and exits. And yeah, as a newbie, you do, especially when you're trying to develop a mechanical edge, a statistical edge on a strategy. But when you start getting more discretionary, you see trades like this, you just don't argue with it. You find something that looks like a decent enough entry and you take the trade. And it worked out. Let's go back to the 5 minute chart. So I placed a little trade here. I've adjusted. We talked a few videos back around how I was probably going to ditch the Bollinger Band take profit that we originally did the back test with and just start trading what I saw off technicals. So you can see here, I took profits into this technical level from the daily chart. And then when it held up, I got in the next day on that technical level on the daily chart. I was kind of hoping that we would see a move to all-time highs. That's what this line is from the daily chart, but it didn't. So I ended up just I moved my stop up here and I just kind of took profits. However, something to make note of is if I had just let this run, I had my stop level down around this intraday level. So around 26,250. If I had just left it in, it would have consolidated through the night and I would have got a nice winner the next morning. So I actually got in again here, and that's exactly what happened, right? As it turned out, I don't think that I made a poor decision here. I ended up moving my stop up, got stopped out for like a little bit of a win. It was a very minor win. Got in again at that technical level and had a very good win the next day. So that was basically our trades for the week. I went ahead and logged them here. You can see MCL, gold, and then the NASDAQ micro futures. We were able to bring our win rate back up to 50%. Another thing that's discretionary that I'm bringing to this strategy is the shift to the NASDAQ. That was discretionary. I just decided that based on my experience, it was the kind of thing that would make for a good day trade. It had momentum, so I went ahead and did it, and it worked out. If it didn't work out, we would have kept track of that. So I've started another sheet based on what I see on the charts, and we're just going to go ahead and track that and see how everything works out. The other thing, I don't like clutter, so I'm actually just going to go ahead and hide some of this stuff so that we can keep our spreadsheet a little cleaner. And let's rename this. So what else did I see here? That's going to it's based on what I saw on the charts. So another thing that we're diverging from based on what we back tested is I'm not necessarily just trading regular trading hours. And how am I doing this? I've mentioned this before, and this is becoming more and more of a key thing because so many people just sit there and watch the charts all day, and it's actually bad for your trading psychology to do that. It's very hard. So I'm going to show you right now how I do this. And you're probably already familiar with bracket orders. So what I would do here is I would set up, let's say I want to take the breakout. So it breaks out again past this level of all-time highs for the MNQ. So I want to enter there. So I'm going to go ahead and set my stop loss down here. It already knows where I want to set it. I'm going to give it a little extra. We generally like to risk $500. That's what we're aiming for, but it doesn't always work out that way, right? I can't take a second contract here. Otherwise, that's going to turn into 800, and I don't want to risk that much. And then it's giving me a 2-to-1 risk to reward automatically. There's no key resistance levels because this is all-time highs, right? So I'm just going to go ahead and set that just for the way it is. Set it as a stop entry order so that when the price breaks that level, it'll automatically get me in. And that's it. I'm just going to go ahead and set that up. It's Sunday at 11:40, so the futures market is going to open later on today around 5 o'clock. And if it breaks that level and continues higher overnight, then I'll wake up to a win tomorrow morning. It's that simple. I'm not sitting here and watching this because that is silly. That is a waste of time and a waste of emotional energy. And it takes some strength, emotional strength, to have that discipline, and it's completely unnecessary to do. So we're not going to do that. That's about all I have for you today. I'm not going to do another deep dive on the strategy and try to figure out, what I can see from all these past trades that's going to work. We're up to 36 trades. It's still not, honestly, a very meaningful data set as far as having enough trades to really do a solid review on. We made some good decisions last week, so we kind of were able to get that win rate up a bit. Expected outcome still not that strong. It's we placed what 5 or 6 trades last week. One, So we placed 7 trades last week. So even at the level it's at here, you could potentially look at making an annual return of 75%. Again, it's not super meaningful yet because we don't have a large enough data set. But what I want to take away from that is that we want to get this expected outcome up considerably. So I'm going to keep working on improving the win rate. I'm going to keep working on trying to get this average winner size up, or my risk to reward ratio. And I'm going to do that by, as I trade, I'm going to continue to try to identify things that I see that are happening in real time. And probably next weekend, I am actually going to go back and do a deep dive. Hopefully, by then, we have over 40 trades logged. And, it's something to kind of go back and look at and see where we're getting our winners from. Try to see if there's more correlations that we can find to help us to improve this strategy. So that's about it for this week. And yeah, I'll see you on the next one.